Good afternoon and welcome to the 2020 Economic Preparation and Disaster Channel. I'm your host, Tony. Thank you for joining me once again. Well, it appears that after better than expected news, the stock market continues to rally on news that is fake and is phony at best. But apparently, the stocks rise, according to CNBC.com, after better than expected job reports to close out a winning week just before the July the 4th holiday. Stocks rose on Thursday following a better than expected U.S. jobs report as the economy obviously is trying to recover from this coronavirus pandemic. The Dow Jones closed 92 points higher, and the Nasdaq hit a record high, climbing 0.5% to 10,207.63. The S&P 500 also gained a half a percentage point to end the day at 3130.01. Now, all of this news is based on the job report. They were saying that Wall Street was saying that a record 4.8 million jobs were created in June, according to reports. Economists were only expecting 2.9 million jobs to be created, and they also noted that the unemployment rate fell to 11.1% from a previous high in May of 13.3%. Economists were expecting a rate of 12.4%, according to the Dow Jones. Another major surprise here that the markets were surprised by about this fast recovery, quote unquote, is that they forecasted last month, the economists forecasted a job loss of 8 million jobs in May, but the economy instead gained 2.5 million payrolls instead. So, but however, we have conflicting information because the Labor Department is saying that the initial jobless claims, as you know, every Thursday at 8:30 a.m. Eastern time, we get the jobs reports numbers, the initial jobless claims numbers, So this week we got another 1.427 million people losing their jobs for the week ending June 27th. Okay. So that's up because economists had predicted only 1.3 million people will lose their jobs for this coming Thursday. The number of people receiving unemployment benefits for consecutive weeks have risen, folks, to 19.29 million, an increase of about 59,000. And so, according to Megan Horniman, director of portfolio strategy at Verdance Capital Advisors, he says there's a disconnect here. When you look at the two numbers, it does show you that there is some distortion in the data. I don't think that the true underlying picture of the labor market will be clear for several months. Well, no duh. Tell us something that we don't know, Miss Megan. When we have over 50 million Americans still unemployed and rising every week by 1 million people per week, that's a big disconnect. But yet we have a stock market that is increasing, and we have this claim that we've somehow added miraculously 4.8 million jobs from where? These are just people that have been returning to work from the shutdown. Now, ironically, as we head into after this holiday, this July the 4th holiday, and God bless our Americans here who are surviving, with this new normal for the July the 4th holiday with their families and friends. I hope everyone is keeping safe and doing things with their loved ones wherever you may be in the country. But let's get back to the topic at hand. Ironically, we're going into phase 2 of another shutdown. Okay, so what happens when these states like California, with Governor Newsom ordering 75% of the state to re-shut down? Okay, what happens when states like California, New York, Texas, Florida, Illinois, states that are seeing an increase now of coronavirus cases, and they may have to shut down bars, restaurants, hotels, gyms, businesses again? What happens to the economy again? Can it sustain another blow? Okay, so there's a big disconnect coming because the virus is still out there, it's still spreading, and this economy, this infection of the economy, this infection of debt, of money printing is not going away, ladies and gentlemen. And so that's why we stress on this channel that you need to be prepared. You need to be holding on to hard, physical, tangible assets, not just gold, silver, crypto, food, water, medicine, things of that nature, but you need to be learning skills, bushcraft skills, survival skills, whatever training class or certification you need to take, because we are going into, or just beginning to see the tip of the iceberg of this next Great Depression 2.0 that we are going to be facing in the next coming year either before the election or after the election. Next year looks to be very bad. The next 2 to 5 years look to be very bad for the American and for the whole Western world in general, Europe included. Okay, so that's why I stress the importance of getting prepared, because they want to keep you in this conflicting number state, the media and everybody, but they're not telling you is that we may very well have the official number now is 50 million, but we may have close to 80 million people unemployed, pushing 100 million before all of this is said and done. And you can't print your way out of that, and everybody can't be relying on the government who's just printing up money, and that's causing inflation in food. I went last week and got 2 bags of food. It was $60, $70 easily, okay? And so we see food inflation on products like meat, not just meat, but canned goods. Food prices are rising on that. Keep track of toiletries. Food prices are rising on that through the roof every week. Meats, cheeses, breads, dairy, canned goods. Now we're seeing prices rises on things that items that people have been buying, like seeds. A lot of people are starting container gardens on their patios and on their porches and their yards. Seeds are going up in price because all of these are becoming things in short supply. Because remember now, the China trade deal that I've spoken about many times on this channel was a bust. As you know, it did not happen. Not even phase 1 of the deal. China recanted all of that. So that's not happening. So we have a stock market that is fake. We have a economy that is continuing to go down in the dumps. The same thing happened in Venezuela. The stock market was going up to 50,000, but the real economy was in shambles. Stores and businesses are filing bankruptcies are at an all-time high. Now, keep an eye out for this. In the month of August and September, the company bankruptcies that you heard about, Hertz Rent-A-Car, Gold's Gym, Chuck E. Cheese's, all of that's going to be coming due. And more additional bankruptcies will be coming due for retail, not only retail businesses, but for commercial businesses as well. So that's going to break the economy too as well. So keep an eye out for that as we head into August and September. Okay. Now, also in news today, switching gears here, I want to talk about the 17.6 million unemployed Americans that won't be returning to their pre-pandemic jobs. Okay. These jobs are basically over, okay? These jobs are not coming back. That's the reality of it, because we're going into a new economic system, a reset, okay? Regardless. Now, remember now, I'm going to tell you the truth. The economy was falling even before coronavirus started, because remember, back in September 2019, they started the repo injections of $80 billion a day, the Federal Reserve, okay? So the economy was already in a vulnerable position, heading into a recession. But now we're going into a severe recession, and even a depression 2.0 that most people have been waiting for these last 10, 12 years since 2008, when it should have happened in 2008. They printed over it and papered over it. So now it's time now where the system is almost at its breaking point. So the 17.9 million people that are permanently unemployed, that have given up looking for work, these people are not going to return to their old jobs once this shutdown ends, if the shutdown ever ends, okay? Because the demand for goods and services is not going to be there, okay? There's going to be short supply, high demand, which normally would be a good thing, but in this case, we're going to be hit on both the demand and supply side, and with stagflation. Once the deflation takes effect and the asset bubble pops, the only people that are going to be able to afford the deflation, of course, is the 1%. They're going to buy up everything at pennies of the dollar, and the rest of us are going to be stuck with high unemployment, stagflation, and inflation on the things that we need, because they're not going to be in short supply, okay? I mean, they're going to be in short supply. So that's what we're facing in the next 6 months, okay? So prepare as best you can. Try to save money outside the bank as best you can, because we all know we can't get any interest on our savings or CDs, because it's just so pitifully low right now. But try to save money outside of a bank, and try to convert, have as much cash on hand as possible, because you're going to need it if there's a glitch in the system, or the bank decides to limit you to $200 a week or $500 a day. A month, until they get the new system in place, the universal basic income, which I believe we're heading towards probably after the election. Whoever wins, is still going to be heading toward that, because there's going to be just too many unemployed people here from both the private and the public sector to sustain an economy over here, when we have 70% of Americans, 70% or 80% of the American economy is based on consumption, and that's just not going to be happening. So, okay. So continue to prepare, my friends. I just wanted to give you this quick update here quickly. I will be back with you shortly later on this week. Enjoy your holiday weekend. God bless you. God bless this country. And we'll talk very soon. Take care.